Hey, aloha everybody. So I'm going to pick up where we left off. Is everyone able to see my screen right now? We're good. Okay. So for those of you who have been on this call, it's important that we record this so that many of our farmers can view this later. There's just a lack of information out there as far as what type of insurance is available. Some of our farmers have liability, some have some property. But crop insurance is not a form of protection that has seemed affordable or has made sense to our small farm business operations in the past. And so we're really excited about learning more about this new program, the Micro Whole Farm Revenue Protection Program, and understanding if this might open up some affordable and essential protection that was not available in the recent past. And so really quickly, I'd mentioned that this webinar today on protecting farm businesses through insurance is part of a greater project, which was part of our Hawaii Women Farmers Network. So this is a growing network that we've had since, I believe, 2016. And we do have an online presence. Much of it is around this online directory where you can search women-owned or operated businesses. We have over 60 on all islands, so you can access this here. We have another platform in which we offer farm business training tools, and included in that are some cost of production tools and training around setting budgets and income goals and looking at scaling up and some tools around that. We also now have added a page on insurance. And so what we hope to do after the call and obtaining more information and understanding a little bit of our farmers' needs, we're going to create a landing page that will have more information on the different types of insurance offered some of our local agents so that farmers can go on there and easily connect with ag service providers, and then also some information on the new Micro Whole Farm Revenue Protection Program. So this is kind of what our insurance page looks like right now, and there's modules to the left. There's some information in the first one. There's kind of a quiz to help farmers understand what types of insurance they might need if they're not quite sure, to help hone them in so that when they have that call with an insurance provider, they have a little more background. And then we do have a full presentation from Lane Webb with USDA RMA, and this is on the Micro Whole Farm Revenue Protection Program. He's not an insurance provider, and so actually we're going to hear from Bonnie, and she's going to give us a different context because she's actually offering this policy, this program, and so she's going to give us another perspective on this. And so I will conclude this and then pass this over to Haley. And again, we're making this informal, and this is really just to, Haley, if you can give us a little background on your operation, how you've grown, and with that, how you've grown, maybe taken on, put in more investments and more, you have more at stake, and kind of what types of liability or property or even crop that you'd like to protect, or things that you'd like to know more that maybe Bonnie or Drew or Brad can speak to in their presentations. So thank you.
Okay. Hi, everyone. My name is Haley, and I co-own Ahiki Acres with my partner, Matt McKinnon. And we've been farming since 2019. After graduating from Go Farm, we entered their incubator program, and they actually require you to get insurance. I think there's like a checklist of things you got to get done. And so the only place I knew of was this First Insurance. Yeah. And so we've been using them just for general liability. And recently we just acquired a 20-year lease through the Department of Ag. And so we just added on that property to our insurance. Yeah, honestly, I feel like I need to become more educated on this, because recently we actually had a theft, and we had a trailer stolen that had $1,000 worth of material on it, and people were like, "Oh, did you file an insurance claim?" And I was like, "No, I don't know how to do that. Um, and we were just like, oh, it's just like $1,000 worth of stuff. Like, we're just not gonna go through that. But, if something bigger were to get stolen, like obviously I'd like to be more prepared. Um, we also recently got our own VCS or walk behind tractor and implements, which I think total all of that stuff comes out to like 35,000. And so we haven't done it yet, but I think we want to get insurance on that VCS. And yeah, I guess we've just never even considered crop insurance because yeah, we just heard that it wasn't, I guess, worth it for us on a small scale. And I don't know, like also we do, oh sorry, I guess more background on our farm. We do diverse vegetables. So we're like a market garden. And so our turnover is super fast. So and we're very small scale. So actually we just are doing half an acre right now. Our new property is 5.7 acres, of which will probably produce maybe like 2 acres worth of veggies on there, and then the rest we're going to do like permaculture. But yeah, I guess at half an acre scale of veggies, I don't know if it's even worth doing crop insurance, especially when we have crops that are so like high turnover. But I guess like for structures, so we had a screen house that I think we invested maybe like 8,000 to build, and over the years we've had big storms, and eventually it fell down. Like we repaired it and tried to keep, and so, but it finally like yeah was just like, okay, we can't like resuscitate it. So I guess if there are options to like do insurance on like structures. I don't know. I feel like I'm just rambling now and I was not prepared.
No,
But this is great because
Haley,
I
thank
feel
you.
like
Yeah, no,
okay.
this is great. And so we have some service providers on the call. We have Jason with FSA. I think we have some Go Farm attendees that lead the some of the business services program. So, this is really common. What we hear is that, you're investing more and more, you have some infrastructure, you have some equipment, you also have some liability, you have volunteers, you have workers, so this is kind of the context that we hear, and farmers just don't know, is this worth the investment? And what we're trying to, the gap we're trying to address is just assuming that the insurance is just too expensive or too small. And that, then you just get busy and there's kind of this understanding that insurance is just expensive. But once you start making a $35,000 investment, and then you make a $50,000 investment, and these are, so many of our farmers are small businesses, and these losses hit you pretty hard if you're going to have to reinvest in that $35,000 piece of equipment. How does that look for your business and the viability of your business? So I think this is part of it, is that in some scenarios, farmers are really scaling up, beginning to invest more, and they want to know at what point is insurance worth it, and how approachable is it to who are the local insurance agents that we can even work with. It's very typical that you heard of only one, and then for us too, I was asking around, and the only one that was known by our farm community was another one, and everyone was using them because that's the only one people knew about. So there's also just the preconception that it's hard to work with insurance agents. They don't want to cover small farm businesses. We're not really worth it to them. So there's been some strategies of, what if we created networks, and then, as a network, brought more business, more service, more interest. So what we're trying to do is kind of understand across the board what kind of insurance many of our farmers are interested in. So you're pretty typical that, a farmer has a piece of equipment that's $35,000 to $50,000 and it's not insured. If they lost it, it'd be a big hit to them. It's critical to their operation. What does that look like? If that's across the blanket, a common scenario of all of our small farm businesses across the islands. Liability is one that, you know, a lot of farmers are making their income off farm tours or subsidizing some of their cost of labor with some volunteers, and they're assuming liability that could really impact their business. If there was a claim, a medical claim, someone got hurt, and the medical insurance company could come after the farm. So there's kind of this education of the needs. There's pretty similar needs across the board of a lot of our farm businesses. And there's also some preconceptions that we're hoping to address today and just make it easier for number one, farmers to locate the list of insurance agents. I think Jason, I've worked with you to kind of understand who are insurance agents and who do we have. And as ag service providers, we want to be able to provide this to the farm businesses that we work with. We want to just be able to have this list. We want to develop these relationships so that we know who we can send the farmers that we're working with, who who they can work with, and just kind of start understanding too the policies, the terms, what's available, what's affordable. So thank you, Haley. I think that kind of gives us, you know, a really good context. And yes, I mean, if you were to continue to invest in infrastructure, you know, purchase another greenhouse for $10,000 or grow and expand to another, I would assume you'd want to protect those investments. I don't know if Drew or Brad, if you're able to speak on this, and I would say, Bonnie, if you wanted to speak on this too, but ag theft is a big one that I know none of us want to touch, but there's ag theft of produce, but the big ag theft is really the theft of property. It's the theft of machines, of trailers, it's not the first time that we've heard someone has come and taken a whole trailer with just driven it off. So yeah, it's kind of understanding what is on the farmer, what protection is available through insurance, and then to obtain that protection, do they need to have fencing, cameras? What due diligence do farmers need, and can we even get protected? So ag theft is something that I think most insurance agents, it's kind of probably hard to deal with, but we did want to have a candid conversation and understand where we're at with that and what's available. It is a big conversation. In addition, we have some ranchers that are also interested in livestock insurance, and then some ag related businesses such as nurseries. And so, Bonnie, I'm going to transition over to you, but Lane had mentioned that ag-related businesses such as nurseries would be covered in the micro whole farm revenue protection program. So if that's your understanding, I think there's quite a few nursery businesses that would also be interested in this program and understanding a little more if this would be, you know, something that they could use, that they spend thousands of dollars in many cases invest in you know, tree liners, or there's big investments. And then there's also orchard systems. So there's quite a few of the farmers in our community that are on 5-acre lots or 5 to 100 acres, and they're installing orchard systems that are long-term crops, and they're very interested in what crop insurance could support an orchard system. So again, Bonnie, to set the context, we're looking at, you know, Haley mentioned, you know, we're a small market garden. I don't know if our operation would be a good candidate for this micro whole farm revenue protection program, but we also have those such as orchard systems and nursery businesses that are interested. And then it would also be helpful just to kind of get a context of what type of farm. Say, Haley and Matt, you expanded, you know, your another 2 acres or 3 acres, and you have kind of a consistent cash crop, and how could that be covered? So if there's no questions at this time, I would switch over to Bonnie, and Bonnie, let me know if you need help sharing your screen or.
No, I didn't prepare any visual
that's good. Yeah.
part of the presentation. And Drew, if you've written microfarm, jump in anytime, because I haven't found any growers that qualify here in Hawaii, but I have presented it a few times. Do you write whole farm quite a bit in your agency?
I do. I write a lot of whole farm here in the Northern California area, as well as microfarm.
Okay. And I don't write a lot of it. So Drew is the one who should be making this presentation. But I do write in Hawaii, and I have a whole farm policy in Hawaii, and I field a lot of calls from small growers, just like Haley. And if she meets the requirements for the whole farm program, she could go through the application process. And the micro farm simplifies the whole farm program in records requirements and price documentation. And it's set up for small growers like Haley. It's maximum approved revenue if you're a beginning insured or applicant is $350,000. So if you come under that in approved revenue after going through all the documentation of what your revenues are for a base period of a minimum of 3 years, then you can go through the process and determine whether or not your records meet the requirements for the whole farm program or the micro farm program. And what you can do is insure up to 85% of your approved revenue, whatever it turns out to be once you go through the documentation as you have provided on a Schedule F. And so you do have to have some documentation of what your revenue is annually. And for the most part, it's Schedule F or a substitute Schedule F if you're not filing a Schedule F. And then it's an average of the most recent 3 to 5 years, depending on how many years experience you have in farming. And so it looks like, Haley, you would have, if you were signing up for 23, you would have a 4-year base period if you filed a tax return in 2019 when you were with Go Farm. If you were still not marketing your crops at that point, then we would go to the next year, 2020. And the minimum is 3 years to start a crop insurance policy under microfarm. Once you have an established approved revenue and coverage level selected, depending on your diversity, you can insure, like I said earlier, up to 85% of what your approved revenue is. But once you have established that approved revenue, then you can choose a coverage level from 50 to 85%, depending on if you meet the criteria for the higher levels. And then what that means is if you suffer a loss due to, for the most part, it's the causes of loss are natural causes like weather, insects and diseases that are not controllable through your conventional means. It doesn't cover theft. It doesn't cover vandalism. It covers a volcanic eruption and fog. I don't know if you get much of that over on Oahu. But if you do, then it would cover that. We've paid losses due to those causes on the Big Island. If you suffer a loss that drops you below what your guarantee is, which is your approved revenue times your coverage level, then you could be eligible for an indemnity. You keep using the word expensive. I don't really think whole farm is very expensive. I think it's a very affordable and approachable as far as keeping it within the budget. And you should always remember that benefits can be assigned to a lender. So if you're getting an operating loan, it's really good to have a policy as a backup to show them that you have your investment covered. But it doesn't cover any other property. It doesn't cover farm structures, anything like that, just the crop while it's in the growing environment. So once you harvest it, pretty much coverage stops. In micro farm, you can get some post-operation or post-growing operations, such as canning, freezing, to get it to the point where it's storable. And let me see. You annually have to apply by, in Hawaii, it's a March 15th deadline. And so I always encourage growers to, once the year is almost winding up, to get their records together and approach an agent sooner than later. Don't push it to that March 15th deadline. You want coverage to attach as soon as possible. And if you're like on March 15th signing your paperwork, anything that happened previous that year is likely not to be covered. So you want the full benefit of an annual or calendar year policy if you're a calendar year filer. As I said, you provide information regarding your revenue history, and that would be Schedule F, or if you don't file a Schedule F with your tax return showing what your farm income is, then you would file a substitute Schedule F. There's a few reasons that you may not participate at the micro farm level with these relaxed records requirements. And that would be if you are participating in another crop insurance program. For instance, if you have a small patch of papaya that you insure under the papaya crop insurance program, you couldn't participate in the microfarm. You would have to bump over to the whole farm program, which would require more records. And if you have, if you're a vertically integrated producer, if you're growing your crop, harvesting it, processing it, and you don't have a third party involved in delivering your crop through in order to have records to back that up, and you're considered vertically integrated, it actually excludes those growers. And I've mentioned this to the RMA multiple times that really knocks out a lot of growers that might participate in Hawaii, because it seems like a lot of growers do take their actual crops to the farmers markets, and that's one of the common ways of selling their crops. And so, especially if they're a small farmer, if they're delivering to a store or to a processor, then they have a third-party record system in place, then they can participate in this program. If they are increasing their operations, there are some factors involved that will allow us to increase coverage over and above what their average history reflects. And as far as prices and individual yields for crops under the microfarm, there's relaxed requirements in establishing on a crop by crop basis what your pricing would be and where the pricing data comes from. When you bump over to the whole farm program, you do have to support your pricing and where those prices come from. And you also have to establish an average approved yield for each crop that's participating under the whole farm program, as well as a yield and price history. Drew, what did I miss that would be a glaring? I basically took this information from a flyer that's available on the Risk Management Agency website. If you go to rma.usda.gov and use their search tab to type in microfarm program, you can see a flyer that presents this program in a simplified format, as well as look at policy details. So you could actually read the actual policy language, and there's a cost estimator there that you can click on and run a quote for yourself if you feel comfortable. Or you could also use the RMA's website to search for an agent that might be available to work with you based on, I would use a state search and not try to find one just located in the state, but with no limits, because most of the agents that write crop insurance are located off island or outside of the state of Hawaii. I'm based in California. I travel to Hawaii multiple times a year to service policies. I've had business on Oahu. I have very little business on Oahu right now. I've written Nurseries, and Nurseries can participate in this program, as well as there's a separate nursery policy, and we can talk about that a little bit later when we go through the summary of the rest. But anyway, I keep running on, even though I asked Drew if he had any ideas about something that I might have missed.
I actually have a quick little presentation on it if you'd like me to go through that.
That'd be helpful. Do you need help
Yeah.
sharing your screen?
I believe I can do it.
And Jason,
Let's
while we
see.
have Drew, oh, he started. You're really fast. Perfect.
Sorry.
Thank
Can
you.
you see my my screen?
Yep. I can see it. Looks
All
good.
right.
Yes.
Nice.
So all right, now just a little bit about me. So I'm actually and the reason why I was drawn to the insurance and specifically whole farm and micro farm policies is I actually worked in public tax accounting for 3 years. I'm a licensed CPA, and as you'll find with whole farm and micro farm, there's a lot of accounting that can be involved with it. I kind of think of it as almost more of an accounting problem rather than an insurance problem. But I offer property and casualty, so that will kind of address your liability and your farm property coverage that Haley had kind of briefly talked about. workers' compensation, crop insurance, and then my specialty, which is and focus is the whole farm and micro farm. Our agency, Ray Scarlett Randolph, is based out of Woodland, California. And we're pretty much kind of a one-stop shop for all insurance needs, farm packages, workers' comp, crop insurance, health benefits. We've specialized in farm and ranch protection pretty much since 1917. That's been our focus. And our risk management services extend kind of beyond just your crops and rather to your overall operation. So then about the whole farm and micro farm, it allows you to cover all the commodities produced, whether they're insurable or not, under traditional multi-peril crop insurance, all under one revenue policy. It kind of provides a safety net for the operations, especially when protection is unavailable elsewhere. It helps stabilize your crop revenue year over year. Additional benefits that are provided as compared to traditional multi-peril crop insurance is it can help smooth out the volatility in the price of a commodity, coverage for uninsurable crops, revenue loss due to poor quality. There's also coverage for replant costs. And then I know someone just asked a question about the premium subsidy. So the subsidy levels can be as high as 30% more as compared to multi-peril crop insurance. And you'll see the subsidy levels on the next screen. I've also noticed that it has helped satisfy lender requirements. I've had a lot of producers that have been able to help secure ag loans by obtaining whole farm revenue insurance, especially where crop insurance isn't available to them. And a lot of those lending institutions do require them to carry some sort of crop insurance. And it's based on your tax history to establish a revenue baseline. And as I mentioned, the subsidy is a lot higher with whole farm. So as you can see here, the top line is your traditional multi-peril crop insurance. So you can see the different subsidy levels that you're getting at the different coverage levels. Then with whole farm revenue, there's a commodity qualification. Essentially, that's just measuring how big of a part of your operation each commodity is. So if we're focusing mainly on the micro farm, then we're just going to be looking at the bottom line, which the micro farm is always considered to have 3 qualified commodities. So with the micro farm, you qualify up to the 85% coverage level, and you can see the premium subsidy that you're receiving for each level with the micro farm and whole farm at 3 commodities. So if you're looking at, the 75 and 80% coverage levels, that's where you'll see the biggest cost and benefit between what you're getting with multi-peril. At the 80% coverage level, you're still receiving a 71% subsidy from USDA as compared to only 48% with multi-peril crop insurance. So that kind of, and as Bonnie mentioned earlier, it's really not as expensive as people think. Especially when you're comparing it to multi-peril crop insurance. For a dollar coverage, whole farm and micro farm is relatively cheap. Documentation needed. Bonnie kind of touched on this a bit. You need at least 3 years of tax returns are required for micro farm. And you'll need your Schedule F, which is your farming operations or a similar farm tax form. And with the micro farm, your historical revenue will be based on 5 years of tax history. So if you only have 3 years, those final 2 years will be filled in by your lowest producing year on the revenue history. But one thing that it does account for is a growing or expanding operation. So Haley, you mentioned that you guys are just picking up a pretty good sized lease. So with that, the policy can adjust for the fact that I believe you said maybe 5 acres is what you're picking up. So it sounds like it's at least or doubling your operation size. So there's ways to account for that with your historical revenue, because obviously picking up more acreage, you're most likely going to be producing more revenue than what your historical revenues would show. So there's ways for that historical revenue to increase by a percentage of your expanded operations. So you also need 3 years of sales records from the farm operation. And so this could be your direct sales records if you're selling it directly at, selling it directly from a farm stand or farmer's market to consumers, or your processor records that you're selling to a third party processor. And if you're going through the whole farm revenue route, you're going to need 4 years of yield history for each crop produced. Rather than just using 3 years of sales records on the micro farm, for the whole farm, you need 4 years of yield history per crop. If you don't have 4 years for each crop, the substitute yield can be used, and you can use anything from NAP data, RMA's established price if they have, or established yield if there's crop insurance available for it elsewhere. There's all kinds of different sources that you're allowed to use to fill in for those years where you may be missing some yield information. For the micro farm, you will need the records of the acreage grown to verify how many acres you were growing in those years. And then you'll also need to put together your expected farm operation report for the policy year, just basically what you're planning on growing for that year. And that's kind of it. Like I said, just a brief little high level overview of the program. But I really do think it's a fantastic program. It's a great way for producers to provide themselves a safety net, smooth out any poor years. And like Bonnie said, it protects you against any sort of weather related events. So if you have some sort of disaster that could wipe out your operation, it's really a great way to provide you that safety net and and make you feel comfortable and help you sleep at night, knowing that at the end of the day, you kind of have a bottom line for your operation on what you're going to be able to produce and ensure that your operation is going to be able to continue during some of those poor years.
Thank you. That was great, Drew. Very helpful. I think at this point, it'd be nice to take a few questions just to have a more interactive kind of dialogue. Jason, I don't want to call out on you, but do you mind if you could kind of speak to some of the context of the farmers that you work with as, FSA, you kind of field many new farmers coming online and verify their acreage. Yeah, do you have any specific questions, or can you provide a context of crop insurance in Hawaii? I know you've mentioned in the past the schedule of yeah. Thank you.
Yeah, this is actually really very good and informative. So I'm glad the panel was here today, and especially Haley, because she's relatively new, right? But there's a reason why, and it's not the product, right? It is what it is, and it was developed in regards to mostly the mainland cropping system, right? And their market, whereas the tropical region, just to give you a brief background, like Bonnie knows, right? Very, very few on Oahu, and I'll just give a little bit of background real quick on that. Oahu is basically the marketplace, right? So you have to be very flexible, just-in-time market. There's none of this process, very few fresh vegetable, truck crop, mostly Southeast Asian, small farms, right? And most of the market, right, for the full-time farmers are open market. And you, like Bonnie said, that doesn't lend itself to the products she has, right? And for the revenue, I really liked it when it came out. That's really simple, clean, right? But the problem is, most of the small farm operators, like I'm saying, it is what it is. They're not reporting all their income. They have to be flexible in that way, right? Cash basis is really strange when I first went out. So they'll have other farmers picking up from each other what they don't have for their market, right? And paying them cash. They're not reporting that. Or other people just picking straight out of the farm. Frankie's Nursery is a good one too, right? They just pick the fruit, grow, and I forget what they call that. So that's pretty prevalent around here. And the reason why these farmers, a lot of them don't go to aren't selling to like Armstrong Produce, Whole Farms, Costco, is they don't have the infrastructure, to maintain quality and consistency that they require, food safety, GAP, etc. Right? They require that, and these farmers, most of them, right? I would say easy 80%, especially on Oahu, they're leasing short term, month to annual, as long as 3 to 5 years for most of them, right? You're not going to put a cement concrete pad and water quality testing and go through all that on a farm you're only maybe being removed from soon. So I said I'm going to be real quick and I'm going on, but you can see it already happening here on Oahu. There's a big change that's going to be going on within the next 3 to 5 years with what they call these ag development projects. They buy a huge parcel, developers, then they split it up into these smaller 1 to 5 acre, as big as 10 acre, what they call condominium property regime units. Those farms, those people buying the farms, the majority of them are not full-time farmers, right? Commercial. You're setting up, and a lot of them are buying it only if they could put a residence on it or nearby, right? So in that case, we're going to have a lot of gentleman farmers. You can get 2 acres, and they're thinking, oh, it's only $300,000 or $500,000 in their mind for 2 acres, right? But no farmer's going to be able to afford that, right? If you think about it, especially the small farmers. But that's just why it is what it is over here on Oahu in particular. And I see Haley's concern. And one important item, Haley doesn't even know this yet, but she's automatically covered, already. If you got the pandemic payment and you're an underserved producer, you got an extra payment, you automatically get covered for our non-insured crop. But I don't send out the letter or notify them. It's through our national office. So they will be sending a notification to all these farmers who received it, which is a lot on Oahu, by the way. The problem will be, right, will they be able to maintain what they need, the compliance side, right? Plantings and production reporting requirements. That's the key. So you can have it, but you got to be able to maintain it, right? The records and report timely. And that's always been a problem. You're going to need a good map, because you're going to have to map each of your fields too now. You can't cut corners like we could before and try to make it fit. It's got to be mapped, reported, and everything. And now we have GIS and a acreage reporting system. Everything's kind of ramping up, for compliance wise. But I can give a little bit more information on that, but I'll defer back to the group.
Yes, I think it'd be good to hear some of that. So, I think we're seeing a full spectrum of what ag looks like in Hawaii. The Women Farmers Network, we are on all islands. And I think, we can start to kind of provide some characteristics of farmers. We see kind of small farm beginning farmers going through the Go Farm program and then trying to find their own long-term leases or acquire land. We see some multi-generational farms, but not as many. We have a lot of these large plantation lands, pineapple or sugar, being split into smaller parcels and then being bought by ag landowners. And then we also have some industry level kind of cooperatives or networks. We have the Ulu Cooperative, we have cacao, we have the Hawaii Avocado Association. We don't, to my knowledge, have one for citrus, but we're starting to have these kind of commodity groups kind of joining together and trying to bring up the industry. And at the same time, we have GAP, food safety certification. So there's that. So I do see that there's some infrastructure being put in place. There's also the Good Food Alliance, which is trying to provide a network of food hubs. So we have food hubs on all islands. So we've got, the difficult challenges, and we also have some new infrastructure and some new tools that might help get our farmers where they need a little more. We have been doing record keeping cohorts. So teaching, I think Haley participated 3 years ago. We did a cost of production cohort with Oregon Tilt to really help farmers understand their cost of production, their margins, and really set up for record keeping. So setting up and tracking, food safety also requires that. We do have some of those tools online. So Oahu RC&D, our organization, OACA, Oahu Ag Conservation Association, and then North Shore EVP with GAP certification. We're all creating these tools together. We do see farmers too that are landowners not have a history in farming, but they're investing mainly in orchard systems. Some of them are plugging into these commodity groups. They're business minded. They want to do things right. They're used to protecting their investments, doing some numbers. So we are seeing some of that. And I think that might be an audience and an opportunity that would be helpful to kind of think about if the topic we're discussing now is what type of farmer could benefit from the micro whole farm revenue protection program in Hawaii, and characterizing different types of farm and farm situations. I'm interested in just kind of hearing from the group what type of farm operation would you see as ideal? And Bonnie, you have experience working with farmers across the islands. Do you have any that you could characterize on Big Island, or who would be your ideal client? Yeah.
I've worked on Oahu specifically with nursery growers. I feel like the program works for them. There were some new rules that were instituted about 10, 12 years ago that they were not happy with. And that included producing inventories annually and updated inventories. So some of them didn't have software or were not automated to where they could update their inventories easily. And I still write nursery on the Big Island, and those growers all buy up because there's a volcano on that island. And so they do participate on the Big Island. On Oahu, the growers I had kind of left the program for one reason or another. It's not hugely expensive either. I mean, most of these programs are not as expensive as people have rumored them to be. So I always encourage nursery growers. There's a papaya program in Hawaii that actually covers the production of papaya fruit. So papaya growers have a very easy program to participate in that's not whole farm. Banana producers as well. And I've written these growers off and on over the years also. Coffee, growers that grow coffee. Is there still a coffee farm? I feel like I approach that grower every year and they've never participated. So maybe somebody else writes it. I don't know. I don't write everything. But anyway, those growers that grow crops that are named, that have named policies, are the ones that have an easier time of applying for coverage. The whole farm policy is the tricky one with the records requirements, the tracking of acres, pricing, and marketing of product. And like what Jason said, sometimes they go in and buy a product and it may be a cash deal that nobody writes down on a piece of paper. And so that's where the challenge is for whole farm. And from now on, I'm going to refer all my whole farm inquiries over to Drew so he can deal with that because he has the accounting background. He also can, with an accounting background, you really can understand the program better. You can also probably help the growers set up their systems for record keeping. I don't know if you offer that, Drew, but that's something that I shy away from because I don't have an accounting background other than taking some, college courses in accounting. So that's the tricky program. Ones that have good records are not buying for cash, not buying other people's crops for cash. And if they do, they have it recorded because you can cover some bought in product under the whole farm program. There's some criteria listed for that in the policy. I think it's half of your income has to come from your own grown products. But if you buy in and market someone else's product, as long as you have good records for that, you qualify. So it's the records of pricing, production, acres. If you have a solid record keeping system, then I would encourage a grower like that to investigate the whole farm program.
There's
Whole
one.
farm, either at the
Yeah.
micro level or the regular whole farm program.
There's one untapped market that would fit well with whole farm revenue, and that's the immigrant Chinese herb exporters. Yeah, they have very good records. They keep very good tabs on what they're because they're exporting, right?
Right.
So you have the price right there. Every day they ship out, they make big money, and they lose a lot of money too, right? Even quality, right? They get, but I've mentioned that to them, and they've wanted to have our insurance before, but when they see what they have to do as far as for non-insured crop, forget it. But the whole revenue, I think, could work for them. But there's a big distinct language barrier, and
Yeah.
you bring up the CPA.
Yeah.
You know who, with our agency, everything for our programs, it runs through a few Chinese CPAs,
Oh,
They
yeah.
do all the application for, I'm sure they're taking a little bit of money, right, for their services, but they don't understand English, but man, they do well. Yeah. And their records are okay because they just give everything to the CPA and they do it. Their records are as good as the CPAs, right? And sometimes CPAs, oh God, this guy's dirty with his record. I'm not even going to take him anymore, right? Right? Yeah, I'm sure Drew had some of those, right? Their hair,
yeah.
shoebox, go. But there's a few, and like I'm really glad you brought up that it could cover if you buy from others because they were under the impression they couldn't cover that. And they do have a lot of, every year they have pretty significant ups and downs, yeah. Because there's quite a bit of disease with basil in particular. So that'd be something we could work on because they definitely could use it, yeah.
Yeah, and I think Bonnie said it, that as long as the commodities that are purchased for resale are less than 50% of your total revenue, then the commodities purchased for resale are eligible to be included under the whole farm and micro farm.
Yeah, that might be one untapped market that can, but of course, have to let the CPAs know it. So I'll forward it to the CPAs that we work with, yeah. And let them know about that because they have inquired quite a bit. Whenever it rains. Yeah.
Yeah, and basically kind of what Bonnie is saying on the record keeping, it does take a bit of effort from the producer to want to work with the agent to put the policy together. Like she said, there's a lot of documentation that's needed. So there has to be definitely a willingness from the producer to want to work with the agent to get it done. And
these
get
guys are only
everything
growing
put
one
together.
or two crops too, either basil guy or beetle leaf or right. Most of these larger farms, there's one or two crops, at the most 3.
Yeah.
Whereas if you look in the background that I got there, and even behind India, right? Can you be reporting every planting when they're planting by the row for the next week open crop, right? It's so intensive. I mean, to fully comply, I think it's almost impossible, because you're picking from other fields too, right? At the same time, depending on the type of commodity and the time frame, plant to harvest time frame, right? And whether they're multiple harvest or one-time harvest, you got all that mixed in there. Ooh. Yeah, I tried to figure it out before. Ooh, you just got to pick a couple.
Ties back to their taxes, so that's as far as establishing the approved revenue.
Yeah,
it's based
the
off
revenue
of
one
what they
would
file
work.
for an annual income. Drew, do you do translation services?
Yeah, we have translation services.
Oh,
but
you do? Okay.
Yeah, but a bunch of them said, "Oh man, that's terrible." Our fact sheets and whatnot. But there's Pacific Gateway Center here, and throughout the islands, they're networking. They just got big money to help us with that. They're good, and they work directly with immigrant farmers. Yeah.
We can look for that, Jason, too. We're doing a fact sheet on this and then having Farm Commons read it through. I don't know if Drew or Bonnie, if you'd want to look at this too, but we could work with them to see if we can get it translated into Mandarin or Cantonese. Yeah.
Yeah, but I
So-
see a farm operation like Haley. Yeah, I could see the revenue program working for her.
You know, I think Go Farm teaches a pretty good crop planning, section of their a portion of their cohort. It's not easy when you're producing, 45-day crops and you're turning them over and they're not by block, they're by row. But with the farmers we've worked with in our cohorts, they really want to get record keeping down. It starts with the farm map, it starts with the production plan. Many of our farmers kind of scale down to 3 main crops just to simplify after they've been doing
Yeah.
it for a while. There's, their kind of main 3 crops. So that's one way, is just to look at how to ensure those main crops. With record keeping, Drew, is it mainly just kind of the categories that would be on a Schedule F? Is there a certain chart of accounts set up, or any way to run like something that you like to see?
As far as the record keeping, besides the tax returns and the Schedule F, just really sales records, keeping track of the, essentially you'd want to keep track of the yields, and basically just your total production, with the acreage grown, and then making sure you are keeping track of those sales records, especially if you're going to farmers markets. You'll need to keep track of those, any direct sales like that from farm stands or, direct to a consumer. You have to have some sales records that have to match, what you're putting down on the tax return. So those can be verified in order to include that revenue. And any processing records that you're getting from a third-party processor, definitely keeping those. With the micro farm, you're required to have 3 years of those records. With the whole farm, you're required to have 4 years of those records for each of those commodities. So with the micro farm, it's a little bit more simplified, but again, you do need to keep track of 3 years of records. So it does take a bit of organization and willingness to, provide that information and whatnot.
Thank you. So our time is we're 2 minutes to 11. We were gonna go to 11:30. I know quite a few people said they had to drop off at 11. Can we open up for a Q&A with any of our participants? I'm just going to allow everyone to talk. I think it'd be easier to allow to talk than chat. We did cover a lot. This will be recorded. Is there any questions or anything that any information that we'd ask any of our panelists to elaborate on?
I saw a question in the chat about container farming, and I was wondering if that was for nursery versus or actual like vegetable crops. And
I think
that,
yeah.
Go ahead.
Oh yeah, so I'm trying to ask everyone to unmute, and I don't know if it's working, but if it's the person I'm looking at, I remember that the container cropping was a controlled environment. So it was veggie crop. So yes, sorry. If you're not able to speak, we'll just watch the chat.
Whole crops is what he indicated. So as long as it's generating income, it could still qualify under micro farm, meeting all the other criteria, or whole farm. If it's something that's reported as an ag commodity on their tax return and Schedule F. Right, Drew?
Correct. Yeah.
Thank you. And I see that we were also kind of getting into liability insurance and how that is required. So thank you, Jason, for clarifying that. Although the focus of this was a little more on crop insurance, it's a little new information for us. We also have, farmers in the network that just really wanted to understand, when do they need to obtain liability, what type of liability, what type of casualty or casual or property. So Drew, it was really helpful just to kind of see some of your whole packages. As next steps, we are putting together this landing page just on the crop insurance itself. And would there be a possibility to kind of include, I know farmers have tried the RMA insurance agent locator, but is there, I don't know if there's a willingness or an interest amongst us, amongst the service providers, to put something together that would have more information on maybe the FSA insurance liability requirements for lenders, also links to different insurance providers, but just kind of a resource page. So if there's an interest in that, it would be good to hear from people in the chat. I think, it'd also be nice to know what other types of information that is not easily available that would go on this type of resource page. If anyone wanted to kind of chime in or comment on questions they get a lot from ag businesses that they work with that they'd like to see addressed on a resource page, or any other questions.
Yeah, and as far as record keeping workshops for insurance, I'd be fine with that, and put the providers, of course, provide their information on that as well, because that's the key. That's where it follows from. So a lot of goes, what do I get if I lose everything, right? The farmers want to, but I go, yeah, but you want to focus on whether you can get it first, right? This is what you're going to have to do first. I think that's where we should try to follow. If you can do this, then you can get that. And then everybody provide their fact sheets and whatnot. Generally, the fact sheets, right? We all know it. Some of it's kind of poorly worded. It's not farmer-friendly language, yeah. Right.
I rewrite most of mine for that reason.
Yeah, same
Try to put them
here.
in English. I try to put them in English in a format or an order that makes more sense to me. And so I don't mind providing a grower that information. I don't think I want it posted on a website, but I don't mind my contact information posted there. And there may be other agents. I mean, we didn't I know there are other companies that are active in Hawaii that aren't represented here. So maybe you should go down the list and call them all. I mean, it's not that many when you select just licensed in Hawaii, I don't think, is it? So on the RMA's website, their contact list, I think a grower, could just start calling if they wanted to, but I wouldn't mind being listed as an agent who is active in Hawaii.
Thank you. Yes, I think Jason had given me a list, and we had gone through, Logan had worked, we worked together to call down the list. We do have 2 other agencies that we work really closely with that have been very active, and they just participated. And so we've already kind of held similar webinars with them. So we do have them, but
Gotcha.
it really is, it's not a big, trying to figure out who's actually active and who does want to work with some of our small farms is really helpful. And so, I think, Drew, if you work with larger farm businesses, I do think there's a few out there. And so I think, it's just helpful to kind of.
Oh yeah, we work with, and I work with all sizes of
Okay.
farm businesses. So I'm more than happy to help with any questions anybody has on the whole farm, micro farm side, as well as the property liability side as well.
Okay, thank you.
Yeah, I think the problem we have here too is price for the small farmers. And that's all over the creation, yeah. Depend. And if one of the bigger farmers, like Loon Farms or something, when they plant cucumber, a lot over the years of small farmers throw away, a lot of their crop. It's not even worth picking. So that price, when they see I always ask what's your average price, they look at me like, well, depends on the season, yeah, and who's growing. Yeah. Everybody looks at basically, I think even Haley knows this. The key is you got to find your niche, yeah. Try to grow what others aren't. Yeah.
Okay, thank you. I think we had so much covered. We are putting together this fact sheet from the perspective of farmers in Hawaii. So trying to kind of provide that context, some of the questions, kind of question driven. So questions from our farmers, questions that were addressed today. So it's more relatable. And so thank you for all coming together to provide this information. I do see that record keeping has been a barrier, and it is something that I think we're working to build that capacity up through our ag training programs with Go Farm, with OACA. You know, it's really always helpful to work with FSA as well, just to understand the needs and where improvement could go. So thank you very much for all being on this call today. And we will be posting this on our website, so it will be available to a much wider audience. And so the fellow ag service providers, feel free to share this as a resource. And thank you all once again.
Thank you for inviting me.
Thank you.
Thank you for having me.
Yeah,
Thank
thank you
you.
very much. That was very informative.
Thank you.